So, there are different types of forex traders. Okay, just like there are different you and me. Okay, sorry, and me and you are you. There are actually different kinds of people in the world. Okay, so there are different types of forex traders. The way I trade is not the way you trade. The way you trade is not the way someone else is trade. Someone else. So the way you trade, Makote. So the way I trade is not the way you trade, and then the way you trade is not the way someone else trades. Okay, so there are different types of forex traders in the forex market. We have people that trade for just today. We have people that trade for 10 years, for 2 years, for 1 month, for 2 months, for 2 weeks, and all like that. So in this video, I'll be showing us the different types of forex traders that we have, so that you can align yourself and trade that market. For example, someone on the group reached out to me and was like, "Okay, I wanted to trade daily candle." And I was sitting down waiting for the candle to close so that I could enter the market. And then I was like, "Oh, sorry, only one candle is going to form in a day. So you can't sit down and wait until the end of the candle." So in this video, I'll be showing us the types of forex traders that we have, so that you know yourself, your schedule, and how you can fit it into your own pattern and trading lifestyle to make the best out of trading. So let's get to class and see what we can do in this video. Okay. So, there are actually different types of forex traders. I am a forex trader, but I am different from you. You won't trade forex the way I'll trade it. So, for example, someone got across to me on the group and was like, she wanted to trade, and then she was looking at the daily candle. So she was waiting for the daily candle to close so that she could enter the market. Unfortunately, the daily candle would not close until the end of the day. So you understand like that. I, for one, I have a virtual job that I do apart from forex trading. So I don't have all the time in the world to sit down with trading. But you would see someone else that has enough time on their hands to actually sit down, glued to their screen, and then trade. So there are different types of forex traders. If I can use my hand, we have the scalpers, we have the day traders, we have the swing traders, and we have the position traders. I'll take that again. We have scalpers, we have the day traders, we have the swing, and we have the position traders. Now, the scalpers are those that trade on the lowest time frames, because scalping involves getting in and out of the market. They are inside the market, boom, 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 they are out. Say 1 minute, seconds, they're out of the market. So that's what scalping involves. Scalping sometimes involve taking up to 100 trades in a day. Okay, like I mean 100 trades in a day. You can imagine how fast paced that kind of trading would be. Now, scalpers rely on low time frames with tight spreads. They don't take much pips. They can take just 3 pips, 2 pips, but they use huge position size, like huge lot sizes. So imagine if you are using 6 lots on 2 pips, it would be something what it's then 2 pips 100 times, that's 200 pips in a day. Okay, so it's sort of a fast-paced trading. There's no time to check. Imagine how many 2 minutes candle you would have in 1 hour. So you would have a lot of candles. They just enter. They rely on tight spreads. Like say the spread was on 3-0 before, and then when you enter the trade, the spread comes back to 1-0. They made 2 pips in profit actually. So it is safe to close that trade at that particular time. So scalping involves being in the market and then leaving the market so fast. Just come inside and get your thing, get out, come inside, get out. I used to think I was a scalper until I thought that no, I can't sit down with my screen throughout the day. So if you're a scalper, you must have time on your hands to actually sit down and watch your screen to take multiple trades in the hundreds in a day. Now, the second type is day trader. I am more of a day trader, but sometimes I combine it with swing trading. Now, trade day trading involves opening positions and closing it that same day. Okay, so your trade does not roll over to the next day. So you can take as many trades that you want. If you are using 1 hour, okay, that's the time frame that it's recommended for most day traders. 1 hour, 2 hours, 3 hours, 4 hours time frame. You should not use a daily time frame if you are a day trader, because you have just one candle in a day. Okay, so day trading, you can wait for breakout, you can wait for reversal, you can decide to ride trends as long as you are closing your trade that particular day. So if your trade is rolling over to the next day, then you are no more day trading. You are doing something else that's different from day trading. So day trading is not as fast paced as scalping. Okay, and it has more peace of mind to it. You can day trade and do something else. All right, so it's not as fast paced as that one, and it's more friendly that allows you to do something else. Now, the third one is called swing trading, like swing. You're on one point and you are trying to swing to another point. So it involves leaving your trade for more than a day. It could span into days. Okay, swing trading sometimes means leaving your trade for up to 5 days sometimes. So it's different more than your technical analysis. You know, if you're a day trader, you can just analyze that there's a resistance here, there's a triangle forming, so I should just want to sell because you know you would close your trade at the end of the day. But if you're a swing trader, that means your trade would be like for 5 days. So you need to factor in more of technical or fundamental and sentimental analysis than your technical analysis because your resistance can't hold forever. Okay, for a day trader, the highest pips you might be targeting might just around 100 pips in a day. Like if you just want to ride the trend, just 100 pips in a day. But if you're a swing trader, you'd be looking at say 500 pips in a day in a very good and healthy market condition. So you can't wait for one resistance somewhere and all. It involves higher time frame, and then you have to factor in more fundamental analysis. And then another advantage of swing trading, unlike scalping, for example, is that it's not easily affected by news. Now, fundamental analysis and news, they work hand in hand. News can move your market 60 pips in one direction. For a scalper that is relying on, say, taking just 2 pips, okay, and then a news comes out and moves the market 60 pips in the opposite direction, that has already thrown the trade upside down. But if you are a swing trader and you are looking at, say, 500 pips, 60 pips will not really do you much harm. Okay, so it has more peace of mind to it. You can leave your trade now and go on a vacation or go and do something, provided that you're still monitoring it, of course. So it has more peace of mind to it, and it's more of people with an inflexible schedule. Probably you have a work you are doing somewhere, you can't afford to be a scalper. Say day trading too, you don't really have so much time on your hand, then you can be a swing trader. Now the final one is the position trader. Position trader is different from others because it sometimes means leaving your trade for up to months or years in some cases. Okay, so you are not leaving your trade for 1 week, you're not leaving it for 2 weeks. It means placing one trade and not taking your profit until after like 3 months or 1 year or 2 years. So that is what position trading is. It's like it ranks highest in terms of patience, but it allows you a flexible schedule. You imagine placing a trade and not taking profit until after 1 year. That means you can do something else throughout the duration of that 1 year. But like swing trading, you need your fundamental analysis to and sentimental analysis because we are talking about thousands in pips. Okay, not that you don't need them for others too, but when it comes to position trading, as much as you need your technical analysis, you need your other types of analysis so much too. So those are the types of forex trading traders that we have. You can use that to schedule your time and when you trade. If you have enough time on your hands and you can sit down with your screen, you can be a scalper. Just sit down with the seconds time frame or 1 minute, 2 minutes, 3 minutes. You can even try 15 minutes for a scalper. Okay, we have 15-minute scalping strategies. You can try 15 minutes for a scalper. But if you don't have time on your hands and you don't like fast-paced trading and you still want to take your profit in a day, you don't want your trade to span more than a day, then you should look for day trading strategies on 1 hour time frame, 2 hours, 3 hours, 4 hours time frame. Now, if you have more time on your hands, or you prefer if your trades are not confined to a day, or you want to trade on the 4 hour time frame or daily time frame, then you should try to be a swing trader so that you can leave your trade uh, overnight over a couple of days. So if you're a swing trader, trust me, you should not want to trade 1 minute time frame. Okay. Then position trader, she should look to trade on the weekly, on the daily, on the weekly, and on the monthly, because you are leaving your trade for months and sometimes even years. So I believe that should help you know when to enter your positions and how to take trades, the kind of time frame that you should look at, and when to close your trade to be able to adjust it better with your timetable and your schedule so that you know when to enter the market and when not to enter the market. So the big question is, what kind of trader are you? What type of time frame do you want to take? Do you have enough time on your hands to spare? If you can correctly answer those questions, then I'm very sure that you find your footing trading a convenient time frame for you. So that will be all for this video, and thank you very much for joining me on this video.